Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through dollar yields, precious metals, and commodities ETFs that I follow like we normally do. I'm going to give you my financial opinions as I go through it. And if you guys need any help with anything, check out finding-value.com. That's where I go through all of this stuff and individual companies and how I'm setting my portfolio up for the commodity bull market. So let's dive in here. Let's take a look and see what things are doing today. We've got the DXY, which is, I don't know what's going on here. We've got this. This is squeezing up. It fell down out of this pattern yesterday. Powell did some his speech, and it came back up. And I know he didn't raise rates, but rates still, at least the 2-year, still went up. And now the long end of the curve is really starting to move up. So this pattern, it's hanging on by, again, tooth floss, but I still think this thing could go lower. And what does that mean? It means that perhaps yields could go down. But I'm not really seeing evidence in the yields putting in, their patterns. So we can look at the 2-year, and the 2-year is sitting on top of this pattern. It broke out yesterday, and now we've got a little bloody nose today, which generally means we should all know this by now, higher yields, that the 2-year could potentially go higher. We look at the 10-year and the 30-year, and they're just going ballistic. I mean, they're up 3%. Look at that gap. And yes, the gap could be filled as it comes back and does a retest. But it's breaking out of this. It's definitely gapping up today. The 30-year is doing the same thing. And we've got this big gap. It's probably going to come back and do a retest and fill that gap. I get it. But yields look pretty strong here, where they could continue higher, which means bond prices will continue lower. So we've got conflicting information there. We've got the DXY still hanging on. But again, the DXY is a relative strength of the monetary tightness of each currency. That's really what it is. So yields up, dollar, we'll see where it goes. We've got the TYX-TNX ratio. It gapped lower but came back up with momentum coming back up. That gap in the morning really slapped gold and silver in the face. But the momentum is heading to the upside, and that is going to put a little bit less harsh movement on precious metals. So we've got that going on. We are still at what I consider to be very low levels, a very inverted yield curve, which is going to push precious metals higher when it uninverts. Problem is we're still seeing strong yields to the upside. Bond prices, they just move opposite of yields, but this thing looks absolutely horrible. We gapped lower. It sold off even more throughout the day. I mean, this thing looks like crap. Not only that, we're sitting in support level area. I mean, this is a bunch of buyers and sellers, and I guess, their grandmas don't even want to own bonds anymore. Everyone and their mom is selling. We've got the Fed Reserve selling. We've got China and whoever else holds the bonds. Japan. Looks like everyone's selling. So again, I'm not jumping in front of that selling train, but this looks pretty bad for bond prices, which means yields higher, bond prices lower. And then even when you look at the 2 and 10-year, what the heck is this? I know it's called the bear steepener, where the long end of the curve goes up more than the short end. But this is a falling wedge, guys. What kind of signals are being thrown around here? Rising wedge breaks down, that's kind of what happens, down and down. Then we got this weird setup where we came into a falling wedge. That generally breaks to the upside. Interesting what's going on here above, we'll call it above the support line up here, and how inverted this curve really is compared to history. So let's just get some more data underneath us, see what the heck's going on here. I'm seeing some pretty weird trading going on in the markets here. Generally, this breaks to the upside, but this sure has got us confused. or at least it has me confused. That's where the longer end of the curve shoots up. It's that bear steepener that is sometimes that occurs before crashes. And I can tell you with rates going up and the way that this is behaving, we could see instability in the markets. Gold down, but it's not out for the count, that's for sure. We're still squeezing up. We got some selling pressure today, but it bounced on back. So if we were to look at this, you can see this selling pressure early in the morning, and it bounced back up throughout the end of the day. That's what that wick is at the bottom here. That's the wick at the bottom there. That's bouncing on up. So you have your opening price, your closing price, and the bounce throughout. Silver bounced pretty hard today. You can see the big wick at the bottom. If we were to look at that in the short term, you can see the big old move and then the bounce on up. So the momentum is to the upside in the very short term, and not too much damage occurred there. Someone obviously dumped a bunch of futures contracts at the beginning of the day to get that thing to gap down. I don't know what kind of tricks they're playing, but silver's holding on okay. Platinum did the same thing, little wick at the bottom, just like gold and silver. So again, just be patient here, and we'll see where we go. The XEU to gold ratio, we're getting some more selling pressure in gold and silver mining companies. We're right against support. Again, I would just be patient. Seems like a very weird day today. We've got the CRB index selling off. We've got oil pulling back, just like we thought was going to happen. And it does look like it might have a little bit of legs here. But if I were to take a guess, it's probably going to come back to this level down here for oil. And it's got a little bit more ways to go. And that's kind of my expectations around that. But again, we've broken this pattern to the upside. We might have a little bit of a pullback, and then we'll see where we go from there. The CRB index to the S&P 500 is still outperforming, although we have that pullback in the CRB index. It's still going up. What this means is that we've got some serious weakness over in the stock market. Like I said, when interest rates go up, we're probably going to see serious weakness in S&P 500 and NASDAQ, and that the commodities are most likely going to outperform. They're outperforming, meaning they're going down less than the others. And then I think we'll still potentially see upward movement in commodities, an outperformance of commodities when the S&P kind of doesn't go down a lot, when it relaxes. So we'll see commodities outperform to the upside and also outperform, which means they go down less to the downside. GDX selling off, doesn't like that move today. GDXJ and SILJ, the move in interest rates is what I'm talking about. We could see further downside. We can see it looks like SILJ is kind of fallen to the downside. Look for a move down to maybe $8, and it's at $8.87 in SILJ potential. Crude oil flat today, down 0.07. Someone was asking me how much more downside do we have? Let's back out. Let's take a look. We've got good, strong support here at about, I'd say, right through here, about $82, $83. So it's possible it loses some change going to the downside. 82, 83 is probably my guess of where it might find a little bit of support. TTF natural gas, I hate to say it, but this thing looks ultra bullish, like it wants to go up. We can see that the lows are starting to come on up. We can see that we're at resistance here, so I'll throw a little resistance line through here. And we're throwing in a bullish engulfing on the monthly or weeklies, on the weeklies. The dailies, it doesn't look bad. I mean, we've got the green army showing up all through here. So TTF gas overseas looks like it wants to head on up, like it's too cheap at the moment. And then looking at our natural gas, it didn't fare so well today, down about 4.24%. But it doesn't look horrible either. We're still above support. We're just getting volatility back and forth these past few months. Now, XOP, yeah, you know me. It does look a little bit weak, and we are seeing a pullback here. We've got kind of a trend line that's been broken to the downside, and it is got some pretty strong selling pressure. The red army is showing up. That started right here at this bearish engulfing. I do think that there is further downside in XOP, and we could do another loop, kind of another loop here where we loop back and just do another loop before we break in that the neckline of the inverted head and shoulders. OIH is also up against resistance, and we are also experiencing some strong selling pressure, and that looks like it could continue to the downside with this selling pressure. It started with this bearish engulfing and is ending up moving to the downside. Sprott Physical Uranium Trust, it's hanging in there. I'll say that. It's just hanging in there. Now looking at URA, got a little bit of a downward move, but again, I'm not trying to time this short-term stuff. Just going to ride it, guys. It doesn't look horrible, doesn't look great. We just got to see where it wants to go. URNM also, it's holding on. Again, this is your bearish engulfing here. That generally works its way lower, but not a lot of selling pressure showing up, pushing this to the downside. Same with URNJ. If this is all that it can muster, this is actually pretty bullish. And I wouldn't be selling anything. I'd just be holding on, evaluating this. TAN, we're seeing overall market weakness. I do think this could go back to this support level at about $48. A lot of momentum behind the selling pressure in TAN. COPX getting some selling pressure, breaking out of its little pattern here to the downside. It gapped down with those interest rates. Again, we're still within the overall larger pattern there. LIT selling off. This could get kind of nasty with the tech sector, and we could come all the way back down to here if things get a little bit jiggy with it. REMX also getting selling pressure, and that could have further downside with the selling pressure in the overall markets and the interest rates rocketing to the upside. Now here's the S&P 500. Looks like total garbage. It is accelerating to the downside. We have bearish engulfing, bearish engulfing. I said, hey, look, this could head lower. Here we go. And it is accelerating to the downside. I would not be jumping in front of this movement. NASDAQ also experiencing some selling pressure. We do have a bearish engulfing, and then usually get a sell-off. Is this the big sell-off? It could be. It very well could be, and we could see a pretty big move to the downside here in the short term. EEM also selling off. Does not like those yields going to the moon. Higher yields, stronger dollar, generally speaking. It doesn't like it. And with everything else selling off, why would I want to go up if everything's selling off and the very things that is a tailwind to me, you step out in hurricane force winds, headwinds. It's not going to go higher if we get these type of headwinds. XHB, which is also another interest rate sensitive sector, it is rolling over, and we could see further downside in XHB. We've got bearish engulfing, some big red candlesticks, and we've got kind of a rolling over top, which looks pretty weak. So yeah, I think we're going to go lower here. Moo also selling off, broken to the downside. We could even retest this move at $69. We could see a pretty big downside move in Moo over this next month or two. Copper down. Let's dive in here. Big selling pressure coming down, and then we've got basically an inverted shoulder, head, shoulder, and a back test. So is this going to go up? Let me watch it. I have to see it to believe it. Let me put it that way. We got some selling pressure. We've got lots of buying pressure with that wick at the bottom. We got to come back within the pattern, maybe the next, tomorrow or next week or something. So I'm going to wait and see what happens there. Iron ore still looking fantastic. I think we're going higher there, guys. Boom to the upside. We're also seeing nickel hold on in the face of all this selling pressure. But again, I'm not touching it. No green army showing up in terms of green candlesticks in here. It's all red, big red candlesticks. Aluminum getting a little bit more selling pressure today, but we're still above the support level. So this is a breakout and a retest. I'm curious to see if this heads higher over the next few trading sessions. Baltic Dry Index looking fantastic. This thing is beastly. I think this is ready to go higher. Iron ore's broken out. Baltic looks good. Aluminum looks pretty good. Coal also looks like it's firming up here. Let's go to the weeklies here, show you guys. It does look like we could go higher in coal. I think it is firming up down here. There's the candlesticks if you can see them. So I think we could go higher in coal. I think we go higher in iron ore, which also means that the Baltic Dry Index is going to firm up and move on higher. So that doesn't look too bad to me. Coal, there's your basing pattern, your breakout, your retest. We've got Bitcoin obviously going lower with those higher yields. Bitcoin and Ethereum, I'm not exactly sure where this is going, guys. We've got, a breakdown here, but this thing is, it's holding on. It's holding on very well. There's lots of buying pressure there at this support level, and it's holding. So I'm curious to see what interest rates do. I'm curious to see what the overall markets do and how well Ethereum and Bitcoin hold up here in the short term. But that's what I'm seeing in the markets. That's kind of my take on it. And right now, a lot of things look pretty weak and yields look pretty strong. Does that mean that we should go sell all our shares and run to the hills? No, it's not that scary, guys. I've written through some pretty bad stuff, and all of the big long-term, big picture view like the big picture view of the chart patterns on basically everything. Gold, silver, platinum, they all look good. Oil looks good. Uranium looks good. Copper, we'll see here in the short term what it does. But most everything looks pretty good. Iron ore looks good. Baltic Dry Index looks good. Everything looks good. Looks like we're just puking we're puking some stuff here. That's what we're doing. People are puking some shares up. They're getting afraid. And maybe them being afraid has some sort of legitness to it. We are seeing the bear steepener there, which we rarely see. Sometimes that shows up when we see crash before crashes, and that does occur. We've seen the housing starts pull on down. It's only 1.2 million in terms of housing starts, and that's generally what you see during a weakness in the markets. So let's continue to look at the data, continue to see what comes out in housing starts next month. Generally speaking, it takes a while for the housing market to top out. Now, we could have some sort of weakness in the market here for a very brief period of time. It could be like 2001, where we come on down and then everything comes back up when they lower interest rates. It's difficult to play that because it's not as glaringly obvious as it is when you've got a bunch of inventory in homes and a bunch of foreclosures. When delinquencies are low, foreclosures are low, all that stuff's low. It's a little bit harder to see if a slowdown is necessarily going to come. Another possible scenario is the yield curve stays inverted for a while and the housing market just pins it up there for a good period of time. But with interest rates going up and where they're at, maybe there's going to be some things that puke in this system that I can't see. But that's what we've got for today, guys. That's what my thoughts are. Give me a thumb up for the content, subscribe to the channel, and subscribe to the website if you'd like. We still have that 50% discount coupon code called September if you want to join the monthly membership. All right, guys, we'll catch you later. This is Finding Value.